Today we're going to talk about something called Takaful. It's a really unique and fast-growing way to think about insurance, one that's built from the ground up on a foundation of ethical principles.
So let me just start by asking you this. What if your insurance wasn't a contract you signed with some massive company, but more like a pact you made with your community? You know, a system where the main goal isn't just about making a profit, but about everyone supporting each other when things go wrong. Well, that's the core idea we're going to unpack today. All right, so what is Takaful exactly? The word itself comes from Arabic, and it means guaranteeing each other. And that's really what it is. It's a form of Islamic insurance where everybody, all the participants, chip into a shared fund. Think of it as a donation, or tabaru. That pot of money is then used to help out any member of the group who suffers a loss. So instead of transferring your risk to a company, the risk is shared by everyone. It's all about mutual cooperation, or ta'awan. So here's our roadmap. First, we'll look at what makes this so different from the insurance you're probably used to. Then, we'll dive into the nitty-gritty of how it all works. After that, we'll switch gears and see it from the customer's point of view. And finally, we'll get real about the challenges the Takaful industry is up against. Okay, let's jump right into the big ideas. Because this isn't just, insurance with a different label. It's a whole different ballgame, built on a completely different set of rules. And this right here, this is the absolute core of it. To really get to Takaful, you have to understand what Islamic finance avoids. Things like riba, which is interest, gharar, which is excessive uncertainty, and maisir, or gambling. Now, if you look at conventional insurance through that lens, you can see some potential issues. The whole concept can feel a bit speculative, and the premiums are often invested in things that earn interest. Takaful, on the other hand, is designed from square one to be free of all that. It's built on sharing risk, not on speculation.
And listen, this is no small niche we're talking about. To give you some perspective, even way back in 2010, the global Takaful market was already worth almost $9 billion, and it was growing at a crazy pace, around 20% a year. Obviously, it's much, much bigger today, but that just goes to show you this has been a serious global player for a long time.
So we've got the principles down, but how does this all work in practice? Let's take a look under the hood. It's actually a pretty straightforward flow. First, you and all the other participants make contributions. Remember, these are seen as donations into a big shared pool of money. Then, a Takaful operator steps in to manage that fund, investing it ethically and handling all the admin stuff. When someone in the group has a claim, the money comes out of that shared pool. But here is the real kicker, the part that's totally different. If, at the end of the year, there's money left over, a surplus, that money doesn't go to the company. It belongs to you, the participants, and it often gets shared back among the members.
Okay, so we know how it works. Now, for the really interesting part. Why do people choose it? In a world full of insurance giants, what's the big draw?
Well, the demand is definitely there. Just look at these numbers from a UK study. When they asked Muslim consumers if they'd buy Takaful if the price was right, the answer was a resounding yes. For car insurance, a whopping 71% said they were very likely. For health, you're looking at 68%. Home insurance, 58%. It's clear that people want this option.
But, a good price is just the price of admission. It gets you in the door. To figure out what really seals the deal, some researchers in Malaysia dug a little deeper, and they found 3 key things that predict if someone will actually sign up.
Now, don't let the technical tables scare you. It's actually pretty simple. All that matters are those 3 rows. First is attitude, which is just how you personally feel about Takaful. Next is subjective norm, that's social influence, what your friends and family think. And last is amount of information, which is pretty self-explanatory, how much you actually know about it. And what the numbers tell us is that all 3 of these are huge, statistically significant factors.
So let's just boil that down. What it really means is that choosing Takaful isn't just about comparing prices online. It's a decision that's massively influenced by your own personal beliefs and by what the people around you are doing and saying. It's as much a social choice as it is a financial one. All right, for our last section, we need to be realistic. As much as Takaful is growing and has this powerful, principled appeal, it's not an easy road. The industry is facing some pretty big hurdles to really break into the mainstream. So let's look at an example from Kenya that shows some of the real-world operational risks. In a system that relies on everyone's contributions, you can imagine how damaging unethical behavior can be. And look at this. The biggest problem they found was non-remittance of premiums. That means agents were collecting money from people but never passing it on to the fund. That one issue accounted for over half of the problems. It just completely shatters the trust the whole system is built on.
And if we zoom out to the global picture, the challenges are pretty major. You've got market challenges, like just a general lack of awareness, plus you're going up against these massive traditional insurance companies. Then you have structural problems, like confusing regulations that change from country to country, a real shortage of experts and scholars, and not enough Sharia-compliant places to invest all that money. All that makes it really tough to grow and become as efficient as the big guys.
So let's wrap this all up. What have we learned? Takaful is this amazing principles-first alternative to insurance. It's growing fast, and that growth is really fueled by people's personal values and their communities. But it's also on a tough journey, fighting against some very real obstacles like low awareness, tricky regulations, and fierce competition.
And that brings us to the big final question to think about. As the whole world of finance keeps changing, what can we learn from a model that's built on mutual support instead of just pure profit? The rise of Takaful isn't just about another product on the market. It's asking us to rethink what insurance could and maybe should be. It's a question that might just change the future of how we all manage risk. Thanks for tuning in.